Hey friends, Lucian here with the Bullish Bears team. This video is going to be about how to trade a falling wedge pattern. Now a falling wedge pattern, just think of it as a bigger overall bull flag. So again, don't let the name fool you of falling wedge. Even though price is falling, it's pulling back kind of on a bigger overall time frame like it would be on a bull flag, kind of on a shorter time frame, but a bigger time period. So it's kind of consolidating downwards, pulling back before it goes and breaks out. So again, a falling wedge is basically a bigger overall bull flag. So take away, when you're learning these patterns, again, look for these flags and pennants and head and shoulders, cup and handle patterns, and then look and zoom out, right? So zoom in, and then when you zoom out with your trend lines and connecting angular support and resistance levels, that's where when you find the trends overall, that's when you see these bigger patterns such as falling wedges and rising wedges. And you'll hear me say it again over and over that stocks typically run with the market, especially with these large cap stocks. So when you're seeing what the SPY or the market is doing overall, then you can zoom into the bigger overall stocks like Apple, sometimes CAT, depending on what's going on in the world. These stocks you'll see many of times will have very similar patterns to what's happening with the market overall, especially with Apple. Apple and SPY, you'll see very similar patterns. So you'll see here on this falling wedge, you'll see kind of the flagpole, right? So price is rising up. You can kind of draw your trend lines, those support, connecting those peaks and valleys. And then you'll see it kind of consolidates down. And this wasn't a perfect connection. You could also kind of connected it down right over here. I also like to show things where like patterns are not totally perfect because they're not always perfect. So the wedge might not be perfect, just like a flag might not be perfect or the triangle might not be perfect, but it gives you the idea, right? So you'll see basically a wedge pattern right here. So price is moving up and then it starts falling and it forms into this wedge right over here. Now, with a falling wedge pattern, what you do typically, same thing as you would with a bull flag, you would get in as price breaks out of that wedge. So you would take a long position as price breaks out of the falling wedge, and then you would use a candlestick close below the base of that wedge as your stop. Again, it all depends whether you're trading shares or whether you're doing options, but you'll see kind of same typical strategy as you would with a bull flag. You get in at the bull flag breakout, candlestick close below the base of the flag as your stop. But I like to show this as well because many times with flags and these wedges, you'll get a move out and then many times a retest or a fake out. So fake outs happen. Also, patterns fail as well. So, when you get in on the break of something like this on a falling wedge, just be careful. Like, you can use a candlestick close below here as your stop. But if you want to tighten your risk, if you wanted to use a candle, if price closed below back into this wedge, then you might want to consider getting out if you wanted tighter risk management. But again, with a falling wedge, you go long as price breaks out, candlestick close below the base of that wedge as your stop. Now, just to show you what I mean with how stocks run, especially these large cap stocks run overall with the market. So you'll see SPY right over here kind of has that falling wedge-ish pattern right over back here. Right? So see, connect these bases. Sometimes, again, you'll get these moves down like this. But again, it doesn't have to be perfect. Gives you an idea here. Kind of a falling channel like a wedge, and then price went, and then it breaks out, right? Well, if I go over here to Apple, especially Apple running with the market, when you go and you look here, AAPL, not a perfect falling wedge. It's a different channel, but it's the same thing, right? So it's just giving you the same kind of example. Price is kind of consolidating back before it goes and breaks out. It's not the exact looking pattern, but it's the same thing, right? You can see right over here, Apple right now kind of has a possible bull flag, right? So you have a flag. We'll have to see if it goes and breaks out. But then if I go over to SPY, look at the SPY. Same thing, right? So that's where, you know, finding out what's going on with SPY overall, then you could look at Apple. Not all the other stocks are the same. They're not always going to be the same exact pattern. But you'll see, like, if the market's going up, typically the large caps go up with it. If the market's going down, typically the large caps go down with it. But then you find these bigger patterns overall, and you'll just see these, like, kind of the bigger channels. See this? You kind of connect right here. Kind of another falling wedge. This would be kind of maybe a flag, but you'll see kind of like a flag, kind of a wedge, right? Kind of price goes up down here. See how you can see these all over the place? And that's what happens, right? So you'll see, again, with the market typically going up, right, you'll see these rising wedges pretty much on the way up. And then you'll see lots of times the falling wedges on the way down, right? So, like, the rising wedges, right? Rising wedges as price is kind of moving back up, right? So you can see these, you know, kind of like, this is not perfect, but see those kind of like those kind of goes up like this, you know, and then price will fall. So it's just a whole kind of consistent game of this up and down, right? See these channels up and down, price falls down. What is this? A rising wedge back up. Rising wedges, falling wedges, rising wedges, falling wedges. So important to learn this stuff when you're trading, because you can see the bigger all trends overall, and you can just kind of see just what, well, you know, price is doing. You can kind of just extend it all the way out here, and then you can see just like these bigger, just overall, you know, you can just adjust along the way as price goes, right? You can see back here, trend line up. So right here kind of moves up. See that? I'm not even intentionally doing this. I could just, as I'm doing it, moves up, falling wedge, right? Rising wedge. So falling wedge, rising wedge, falling wedge, rising wedge, rising wedge. And then right here, rising wedge. I hope I'm saying it right now. It's tongue-tying myself. Rising wedge is this, falling wedge is this. So rising wedge, and then what is this one? I don't know if you, I guess you can call that kind of a falling wedge, right? Falling wedge, rising wedge. And then we'll see what happens here. And that's it. So that's how you kind of put this all together, is you find those bigger overall trends, the bigger overall patterns, then you zoom in and you'll see things like your flags, your pennants, your pattern, your cup and handles, your triangles, and all that good stuff. This is why I teach that price action is the foundation to absolutely everything when trading, because when you can see what's going on, right? I'm showing here with the market overall with SPY, which tracks the market overall. If you can find these patterns, then you can see what's happening overall in the other stocks. You just find the same patterns. Sometimes they're the same with the large cap stocks. They're different with penny stocks. But again, this way it's no surprise. Whatever's happening in the world, you might not know what's happening with the event, but the charts, the clues are always on the charts. Learn price action, learn the charts, which teaches you the foundation to absolutely everything when trading. So just to recap, as price breaks out of these falling wedges, that's typically when you go long, candlestick close below as your stop. Price breaks out, this is where you go long, candlestick close below as your stop. Down here, when price breaks out, right over in here, you would go long, candlestick close below as your stop. Down over here, you know, as price breaks out like this is typically when you go long, candlestick close below as your stop. Or if you want to shorten up your risk management, you know, if price kind of goes back into the wedge, you can stop out then if you'd like, right? But you see how this all comes together when you start seeing this all together? It's always this combination of these rising wedges and falling wedges with the bigger overall stocks.